Welcome to Taking Stock for the week ending the 8th of December 2023. I'm Trinh, Head of Research at Stock Doctor, and today I'm joined by our Senior Equities Analyst, Jason Yin, to stream to you all things share market. Welcome, Jace. How are you today?
Very good, Kien. Seems like summer has just come around.
Yeah, it's we've had some warm weather at last, but before we get started, just a quick yet important reminder, the information we provide today is of a generic nature and therefore shouldn't be taken as personal advice. Remember, shares are volatile and any past performance figures shouldn't be relied upon as a guide for future performance in this episode. But Jace, it was a positive week on the Australian share market, despite the fact that GDP data came in below market expectations, with Australia's economic growth just coming in at around 0.2% in the September quarter. Now, the market is currently ignoring ongoing weakness in the economy and really focusing on those interest rate expectations. And you can tell because bond yields, which are interest rate expectations, continue to fall, suggesting that there is an increasing number of traders betting that interest rates will be cut next year. And this comes after the RBA decided to keep cash rates on hold this week as well.
Yeah, it certainly is an interesting story, Ken. Look, at Stock Doctor, we try to separate the facts from the noise. The markets are factoring a base case scenario for a soft landing, which implies the economy is likely to remain above water, while inflation generally falls back to the RBA's band of around 2 to 3%. The market is, however, anticipating interest rate cuts in 2024. However, it's not out of the blue yet. I mean, there are still risks in the works. For example, wage inflation can be rather sticky and has an indirect impact on CPI. And this could suggest that interest rates could stay higher for longer. Ultimately, the central banks are trying to balance the economy without it entering a recession.
Yes, Jay, some good points there. And as the calendar year comes to an end, it's really important to ensure your portfolio is financially healthy. With economic conditions deteriorating and debt costs on the rise, it's not surprising to see that the number of corporate insolvencies have risen by about 35% for the financial year to date. In fact, on the ASX last month, we recorded 2 corporate failures. The first was a gas explorer and production company called Armour Energy. Their code's AJQ the interesting thing is this company has a world-class gas resource. And the second one was a medical cannabis business called Bod Science, focusing on drug development and also commercialization. Both businesses had a compelling investment case, but both were also financially weak businesses, with investors now facing significant losses.
Yeah, it is a bit unfortunate for the shareholders of those companies. On the topic of financial health, Kien, another company that currently misses our health model but is gaining in popularity is lung medical imaging business 4D Medical, or 4DX. Its share price had rallied strongly after it secured a deal with global healthcare company Philips. And even though Pro Medica's co-founder and CEO Sam Hupert sits on the board, we remind investors that the company remains loss-making. So when the company listed on the stock exchange, Kien, management anticipated that they would reach profitability by 2022. However, it continues to operate at a loss. Furthermore, there are dilutionary impacts, which comes from the need to raise capital in order to fund its growth profile. And this is what happened this week. It is a truly interesting story, and we are keeping a very close eye on this.
Yes, these kind of companies, they constantly go to the market for capital raisings, Jason, and we need to be mindful of the risks. And across the commodity space this week, gold prices, I've noticed that they've been quite volatile this week. Jace, what has caused the wild fluctuations?
Well, the gold price tends to have an inverse correlation to the US dollar and also real interest rates. Gold is priced in USD, so a declining dollar on the back of weaker economic data and lower interest rate expectations means that gold becomes cheaper for international buyers, and this potentially increases demand. During the week, we saw a lot of traders take profits following the gold price rally.
Needless to say, Jace, the volatility within this space means that investors shouldn't be too concentrated in gold. Currently, members can choose from our 4-star stock gold miners. You've got Gold Road Resources, Perseus Mining, Capricorn Metals, and also Alkane Resources. So, Jace, can you provide some light on the distinction between them?
Yeah, it's a good question. The great thing about these exposures is that none of them have hedging in place and hence can take full advantage of any volatility in higher gold prices. We like both Capricorn Metals and also Perseus Mining because they have the highest return on invested capital. Capricorn is a low-cost producer in WA with an excellent management team and a new mine in development as well. Meanwhile, investors need to be mindful that Perseus has higher sovereign risk because it has multiple mines operating in West Africa.
And on the other hand, Jace, Gold Road Resources, they've got the lowest return on invested capital out of the four because it has a 50% joint venture with Gold Fields for the Greyer asset in Western Australia, as well as a 20% interest in De Grey Mining, one of the largest gold discoveries in the recent history. Meanwhile, Alkane Resources, they are a smaller cap miner, only producing around 70k Oz per year, but host some exciting exploration tenements in New South Wales.
Yeah, fascinating series of events happening in the gold space. But in other news, Kien, and to remind all members that we have published a link to the help article to account for the acquisition of drilling services business and former star stock and income stock DDH1 by Perenti Group. The link to the article is in our Stock Doctor Daily Digest, or alternatively, you can visit the Help Center on Stock Doctor and type in DDH.
Yes, Jace, Dan did mention that Perenti is potentially a lower quality business than DDH, and that's due to its larger exposure to those mining contracts in West Africa. However, the stock does appear to be trading at a discount, and with gold prices in focus, it may result in greater exploration spending by the juniors, which should support near-term earnings.
And now let's look ahead towards the corporate calendar. It's going to be a pretty quiet week, Ken, although we do have Westpac and NAB expected to provide trading updates. However, interestingly, on the energy front, Ken, Woodside has confirmed media rumors that they are in discussions regarding a potential merger with Santos. Look, there's still a lot of water to pass under this bridge, but before something official is announced, and we are keeping a pretty close eye on what's happening in this space.
This week, we take a deep dive into liquor and hotels business Endeavour Group. The code's EDV after it held its investor day on Wednesday. Now, Endeavour, they operate around 271 Dan Murphy stores, 1,435 BWS stores, and also 354 hotels. Now, Endeavour has been plagued with issues, Jace. Do we think that these risks have subsided, and could this be the start of a rebound in their share price?
Yeah, that's a very good question, Ken. Endeavour shareholders have certainly been disappointed, and this is due to probably three things. Firstly, the gaming regulation, a slowdown in the retail growth environment, and also the potential board dispute that's happening right now. We have addressed these concerns in our analyst commentary, but we believe the market may have overreacted to the potential downside in earnings revisions, and this is due to greater restrictions in gaming and also slowing alcohol sales.
Yeah, talking about the board dispute, Jace, I note that Bruce Matheson, he's the founder of the pubs and pokies machine arm of the business and owns around a 15% stake. He continues to be in dispute with the board and the executive team. And regardless of the outcome, though, we believe the extra scrutiny on the management team will ultimately lead to greater shareholder returns. Hence, long-term investors may see the share price weakness as an opportunity here.
Yeah, and given that the stock trades well below its entry point on the SD30 TSR, trend-sensitive investors who follow this technical indicator would have sold in July and should remain on the sidelines for now.
Yeah, very interesting metrics also under Golden Rule 3, Jace. Given that revenue is relatively defensive due to the resilience of liquor sales through the economic cycle, though, can you provide some color on why the market is expecting negative earnings growth next year?
Look, Endeavour has quite a large chunk of debt on its balance sheet, and analysts are forecasting higher interest expense this year. So this is the driving force in the decline in earnings despite increasing top line. But positively, management stated that they are targeting a reduction in the balance sheet debt, and this should help support its financial health rating.
And despite the ongoing risk, Jace, the Investor Day presentation, it does suggest that management has taken investor feedback on board and is focusing on delivering greater profitability. Now, Endeavour is a company that has strong competitive advantages, given that it has a dominant market share and cost differentiations. Just look at Dan Murphy's lowest price guarantee. But stay tuned for more on this in our commentaries over the next week. So as the year approaches the end, it's an opportune time for investors to review their portfolio to ensure that it has the strength to ride through the economic cycle. So the question this week is, how can Stock Doctor help me review my portfolio, Jace?
Again, another really good question, Kien. Firstly, I guess with all these questions, you should start off with the portfolio manager. Here, you'll be able to see a list of stocks within your portfolio and a history of the trades and dividends. Now, if you haven't had an opportunity to set up your portfolio, we advise you to do so, and this can be easily done by uploading your trade history from your other brokers.
Yeah, that's right. The benefit of having your portfolio within Stock Doctor is that you can have a seamless user experience. For instance, you'll have a snapshot of your portfolio health on the homepage, be able to monitor stock announcements and star stock changes, have automated alerts and create reports for your portfolio performance and income tax purposes. And not to mention, you'll be able to fine-tune your portfolio so it meets your risk and return objectives.
Now, once you have your portfolio on display, click on the Portfolio Optimizer. From here, you'll be able to view your portfolio weightings each stock and also whether the stock aligns to your investment objectives based on the color codes on the right.
And to rebalance your portfolio here as well, you can simply click on the Weight Evenly Distribution button. Instructions on the number of shares to buy and sell can be found by clicking on the View Orders button here as well.
And if you'd like to introduce new stocks to your portfolio, our optimizer algorithm will provide you with the suggestions based on your risk and return profile. Here, you can even compare the golden rule metrics for each stock.
Yes, Jace, there's certainly a lot of features here on Stock Doctor, but if you have any questions, please feel free to contact our customer service rep. Stock Doctor does certainly make managing your investments a lot easier. But that's all we have time for today. Thanks, Jace, for your contributions.
Hey, it's always a pleasure.
Pleasure having you on board, Jace. And this week, we did release an article about the sustainability of the bank dividend yield. So if you haven't had a chance to read it, you can find the article in our Insights panel on the Stock Doctor homepage, along with other content, including Dan Ortiz's review on a variety of stocks on AusSpiz, and also our Stock Doctor virtual event led by Tim Lincoln and Dan as well. Also, if you haven't had a chance here, you got friends or family who you believe will benefit from Stock Doctor and our insights, please feel free to invite them to come on board, especially given that they can also benefit from our attractive Christmas promotion going on. And for every referral, we do donate $100 to the Smith family. Finally, a reminder that Lincoln Live webinar is on Monday as well. So please come along to our panel of experts to ask questions on stocks, portfolio strategy, or how to use Stock Doctor. So just to summarize today's episode, economic conditions continue to weaken. So focus on investing in those high quality, financially healthy businesses to help you ride throughout the cycle. And the portfolio manager as well within Stock Doctor can help you manage your investments with ease. Take care and have a happy, healthy, and prosperous week ahead.